Covering GameStop, ticker GME. Now they do have their earnings after hours today, so we're going to do our analysis, getting ready for these earnings. Again, it's earnings. We never know. We can never really predict if it's going to go up or down on this release. So all we can do is prepare for whatever direction it goes. So that's what we're going to be covering today. Now, one thing before we get into the analysis is you can see before, or when we had our most recent earnings, you can see obviously we did get massively on this news. We started to pull back, trying to fill that gap. But one thing to note, we didn't actually exactly fill that gap yet. We missed it by about 20 cents. So just keep note of this, because if we do sell off on these earnings, that will kind of be a key target to be paying attention to. Because again, most gaps in the market are going to fill themselves. Yes, it almost did, but it didn't quite. So it still can be used as a target to the downside around that $17.70. Again, if earnings are bad, that will be that key focus. Or even if later down, if you're watching this video 2-3 months down the line, the stock's starting to sell off, this $17.70 until it fills is going to be a key level. So to note that, wanted to go through that first. Now, where are we? We are a bit more on the overbought side on GameStop. Now, again, because we're overbought, I'm going to be a bit more bearish on it, because usually you can get a better risk to reward playing the downside. And now, again, we can never predict whether the earnings are going to come out good or bad, whether we will move up or down on that news. But from previous experience, when using these deviation levels, if earnings come out good and we're kind of in this area now where we're a bit more overbought, the move to the upside is never going to be as great as that move to the downside. So that's what I'll kind of say for now, is if GameStop earnings are bad and investors take it poorly, we will get quite a big move to the downside because we are overbought. So you will most likely see quite a big move to the downside. Now, if we go to the upside, I don't think it will be an absolutely massive move. And again, I think a clear one is kind of seeing the most recent earnings on GameStop. We had quite a big move to the upside, and that's because we were oversold. So that's one thing to note, is if the earnings are bad, we'll probably see a bigger move than if they are good. Now, to get onto kind of these key levels, $25.75, basically where we are now. This is our second deviation on the 6 month. Again, this is considered a kind of a key level, and considering we're at this level, if you're above this level, you are considered overbought on the stock. So right now we kind of just dropped below it, so we're no longer considered kind of overbought. But if coming into earnings release we're above this level, again, this is considered overbought. If there's a bad release, big move to the downside. If there's a good release, probably definitely see a move to the upside, but I don't think it will be massive. Now, that is a key support to be paying attention to for intraday and coming into the release, seeing how we reacted it. But if we go higher, we're then paying attention to $29 and $29.50. Now, I do think this will be the key target. Again, third deviation on the 6 months, second deviation on the 1 year. If the earnings come out good, we move to the upside. I could see that being a quite reasonable target, because from where we currently are, it's about 12 to 13% move. Yes, GameStop tends to do quite big moves, but again, if we're going to the upside, not expecting as much or as big of a move, so $13 will kind of 13% would be quite reasonable, and that would be a key target to the upside. And one thing I do want to check is, what are the options pricing in? So you can do this by going to the option chain, seeing what they're pricing in coming into the week expiration. We can see them pricing in about a 2.5 point move, or $4.20. So again, from where we currently are, how far is that? So they're expecting a bit of a move over the levels we've gone through. So by their standards, we're probably looking at around $30, $31. So do take that into account if we do go to the upside. But again, it accounts for both directions. So again, even if they're say predicting a 3 point move to the upside, it may mean then they're predicting a 5 point move to the downside. So that's how I use those levels. Again, that's going to be my key focus as a resistance if earnings are good. And if we did break that, we then have $32 and $35 as even further resistance. But again, I do think those will be quite hard to hit, even if the earnings are relatively good. Now, to cover the supports, if earnings are bad, we have a $22.75 support. Now, from current levels, it's only about 12% decline in price, about a 3 point move. Again, if we go to the downside, expecting a bigger move, I think we will near enough basically blow straight through this level if earnings were poor. So if we break even lower, and as well, actually, we did have a level at 23, but again, both of these, if it's a downside move, I think both of these will get blown straight through. So instead, I would be paying more attention to statistical mean around $19.50 as that key target if earnings are poor. And again, if we get an even stronger reaction than that, then obviously that gap fill location that we talked about at the beginning of the video at $17.70 will be that key kind of level to be paying attention to. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.